Good morning, Courtney. How are you?
I'm good. How are you, Shannon?
Good. Well, we want to welcome everybody to today's webinar on discovering tokenized real estate. I want to thank you all for being here, and a huge welcome to you, Courtney, for joining me as my guest. For those of you that don't already know me, um, well, that's probably fortunate. But anyway, let me go ahead and introduce myself. My name is Shannon Robnett. I've been in the real estate business for right about 27 years on my own as far as a real estate developer and contractor. I'm second generation to the development and construction game, and there's five generations of real estate agents in my family. My mother was a real estate broker in Boise until she retired as a broker 2 years ago at 70. So we've been doing this a long time. But for those of you that don't know Courtney, I want to let Courtney introduce herself and kind of let you know what her background is and how she got to be who she is and what she's kind of specializing in these days.
Well, first of all, thank you for having me on here. And my career as an adult has been a little bit all over the place. My dad was a petroleum engineer, so the chief industry that I've always been involved in has been oil and gas. So we've drilled wells all over the place, and I've continued on down that path even as an adult. So we haven't drilled anything in the last couple of years, but that's been an exciting field and an exciting place to be. But a couple of years ago, I decided that I really wanted to branch out of oil and gas. And I've sold real estate. I've been involved in real estate, and I really wanted to get involved in other aspects. But I actually went down the crypto path first. And in wanting to diversify out of oil and gas a little bit, I kind of started checking out Bitcoin and crypto and what was that about. And so we decided to buy some Bitcoin, which is kind of what started that. But then I found these gentlemen with Crypt Nation. It's Bryce Paul and Aaron Malone. And if any of you are ever looking for anybody to help with guidance and help learn, they are fantastic. They have a Facebook group and then an entire teachable platform that'll go in and teach you what wallets are safe, things that you can use. And I got into that, and then I really started learning about blockchain and all of the different ways that it's affecting our lives and the things and the ways that it's changing everything that we do. So I came in wanting to buy Bitcoin and getting involved in that. But then once I really started looking at blockchain technology and what it's doing to change our world and everything that we're doing, I was really excited about that. So that sent me down probably 50 million different rabbit holes and studying and figuring out, all of these different platforms and coins and tokens and projects and what's going on and who's doing what. And, I think there was this big stigma around, crypto for the longest time. People associated it with, drug money and things like that. And we're kind of working our way out of that. I mean, really, if you take a look, I mean, how many illegal things have been done with American dollars? So I don't think that that's really very fair. The crypto and blockchain space is really pretty amazing, and there's so many fantastic projects that are going on out there. The guy that created JavaScript created the basic attention token, where it's a privacy website where you can go in and you get to choose whether you want to see an ad or not. And if you choose to watch an ad, they pay you for your attention. So it's the basic attention token.
Yeah, and this whole time I thought that was a teenage girl looking for basic attention. I've already learned something new here today, guys. But and one of the things that is amazing, Courtney, is how even I got confused with crypto and blockchain, right?
Right.
And what the difference really is that there isn't a difference, it's just how it's addressed, right?
Well, I think that is where people get really confused. When you say blockchain, people automatically think Bitcoin. Bitcoin, blockchain was actually created 30 years ago. It's been around actually for quite some time. It came up originally in the 90s. But when people think about blockchain or crypto, they automatically just think of Bitcoin. And Bitcoin was built on the blockchain technology. And I have found that most people don't really understand what blockchain is. And all it is a digital ledger. Instead of having this paper ledger where accounts and records are kept, it's all done digitally. And like for Bitcoin specifically, you've got thousands and thousands of computers that are processing information. Say I send you some Bitcoin, Shannon. All of these thousands and thousands of miners and nodes are going to verify. They've got these complex math equations that they're solving, and they're verifying that, yes, Courtney did send Shannon Bitcoin. And once they've all come together and agreed that that happened, that information is written onto a block. It's time-stamped, and then it can move on to the next set of information. And that next block hashes other information. It puts the hash from the previous block, hence creating that chain, creating the chain. And the great thing about it is it's decentralized. So you don't have like a central banking system or a central government that's overseeing it. It's really a technology of the people. And so one of the great things about it is that it's immutable, which means it can't be changed. You can't come in and, cross out or change things or add things to it without everybody being able to see what has happened. So it really is an amazing technology that has eliminated the human component and the ability for corruption, which is pretty amazing and exciting. And it really streamlines things and makes it a lot faster.
Well, and that's where we ran into each other, right? Is in that conversation about the distributed ledger and the immutable data.
Mm-hmm.
And, that's my world, right? Title chain. I mean, following that through from, this 100-acre parcel or a section that got broken down into, a quarter section, and it got broken down into you measure it back when we all go through real estate class, we measure by township and range and all this stuff that is all recorded at the county, right?
Mm-hmm. Right.
But there was always problems. The county courthouse would burn down and all the records would go away. And so then they'd have to go create all this land title again. And that's the real beauty of what they're doing. In fact, I recently saw that India is trying to adopt blockchain for their title because 48% or 58% of the lawsuits that happen in India are around land title, right? So you can imagine a country with over 1 billion people and a lot of them being poor and illiterate,
Mm-hmm.
having title issues because you've lived on this land. It was your father's land. It was this and that. And here comes some guy that put a piece of paper in front of you and you signed it. And, next thing you know, you've got the same story as a lot of the American Indian story, right? So there's a lot of that goes on. And we were sitting there at a table in Belize, right?
Mm-hmm.
It's not like we both just sat down at a cafe. We were at a real estate guy's event. And we started talking about the similarities of blockchain and what title it does and how I was working on this project and she was working on these things. And I think you were really kind of hot to trot at that time about a company that was doing something with car titles and
Yeah, so Carnomaly, they're actually based here in this Dallas-Fort Worth area, and what they're doing is really cool. So they are taking every VIN for vehicles and they're turning them into an NFT. And for those of you that don't know, that's a non-fungible token, which means that it's unique. There's not another one like it. So, and that is going to be stored on the blockchain along with all of the maintenance, history of the car, ownership history, everything will be stored. And they're even taking it another step further. They are doing a total DeFi lending part of that as well. So you will not even have to go through traditional banking systems to get a loan for your vehicle. You'll be able to go to their site, pick out your car. You'll be able to see all of the history, everything that's been done with the car, who's owned it, what kind of accidents it's been in, and then you'll literally be able on that same platform be able to go in and finance your car through. It's kind of almost like crowdfunding. People are putting money in and they are. I mean, it really actually just is crowdfunding. So, and you'll be able to do it through dealerships too. And they've partnered with the National Motor Vehicle Title Administration. So there's cool things rolling out.
Really, one of the things that we're trying to tackle here, and that a lot of people are, I don't think that we're completely unique in this space, but what we're dealing with is really a digital security or a digital title that, like the DMV, we've created something that's unique. And instead of like the DMV, where it's only at the DMV, this is distributed amongst all the nodes. So Carnomaly has built out their network, and now 100,000 or 1 million people have that digital security, which is my digital title on their record that says, yes, Shannon bought this from CarMax and now he has it. And then you've created that digital security. Now, when you talk about DeFi, I mean, is that anything special, or is that just decentralized finance as a overarching term that can be refinance, it can be finance? I mean, explain DeFi a little bit so it helps us.
Well, it kind of encompasses a lot of things, and decentralized finance is a really exciting space all on its own, just because you have the ability to borrow money, lend money, stake things. There's so many different things going on out there, and they're eliminating the banking systems altogether, which is why we're having, we're getting a little bit of pushback from the banks right now, because we're taking the money out of their hands. I mean, I don't even keep money in a regular banking system anymore. And actually, the last 2 loans that I've done through a decentralized finance portal, and I've completely eliminated the banks altogether. In fact, I don't even keep money in a traditional banking system. So,
and we experienced that yesterday, didn't we, Courtney?
We did.
It reminds me of that Kevin Hart bit, the difference between my checking and my savings, where I have to move money back and forth and it takes 3 days. But, really when you start really looking at what blockchain technology is in the distributed ledger and the ability to hold the information and make it immutable, and then you combine that with finance and all of the underwriting process. I mean, those of us that have gotten a home loan, we all know that they want to know about everything. They want to know what's in your savings account. They want to know what's in your past. They want to know what's on your credit report. And all of that information is to ensure that once only you and only them sign that agreement and they put it in a drawer somewhere, that none of this ever changes. And for the next 30 years, everything's fine.
Right.
Where when you do that with a digital security, we have broadcast to everybody that this is the loan. We don't necessarily, and there's different levels of information that's put out there. It's obviously not your social security number or anything like that. But now you've got a pool of people, correct me if I'm wrong, Courtney, that says, hey, we want to get a 6% return. Everybody puts their money over this pile. Carnomaly says, okay, we're doing car loans for 6%. You come in, you buy the car, you get the decentralized finance. It all happens right there. And then this pool of people own that NFT, that non-fungible token of your car title. Is that right?
Well, yeah, and I'm not sure exactly. I don't know who owns the NFT. I'm not sure if Carnomaly retains ownership. I'm not sure who retains ownership of that.
But all the people in the pool have fractional ownership in that NFT.
Well, right. So they funded that. And then once it's paid off, I'm guessing so that the title will transfer over to the owner just like it does now. A lot of the processes stay the same. It's just done on blockchain instead of through traditional paperwork like we see now.
This is what's happened. So now we've taken it from the process and we've likened it. If you guys are following along, and I know you are, we've likened what is happening on blockchain to title chain. And now we're bringing that forward and we're introducing the concept of DeFi.
Well, hang on one second. We have a question. He said if there's a need to repossess. So that was one of my questions also, Tony. Carnomaly, they are actually partnering with many of the different vehicle manufacturers, car sales dealerships and that sort of thing. So they will go in, if somebody's not making their payments, they will go in and repossess that vehicle and sell it and repay the people that funded the loan. And another one of the things that they're doing to kind of mitigate some of the risk in funding loans for people, they will be pulling credit scores. So if you're, 650 or above, you can get a car at like 7%, and then they'll have it funding where you're not just funding one loan, you're funding a bunch. So,
well, and that's where you come into being in the pool, right? So you're getting some of 10 different loans. So the likelihood that you're going to get repossessed is true. But what you have is you have a business called Carnomaly that is creating all of this, and they're getting paid for that, and they're lending money, and they're making money at the dealership, and they're paying everybody. So they've sorted out this business. But what they've done, like you said, is they've crowdsourced that.
Right.
They've raised their money on the through basically a crowdfunding, and then they've given people tangible hard assets back that are titled on chain. So much like real estate, they have found a use to make that so that now we can track that title. We know what happened here. We know that it was in an accident. We know that Shannon subdivided part of it and he sold part of it off. So we're keeping that ledger going forward. And now we have, I think there's 2 states and 9 or 12 counties nationally here in the United States that are looking at creating all the title records on chain.
Right.
So that they would now have access to all that and be able to give that out and not have the record storage and everything else, which that would
And that's what's so exciting about real estate and what is rolling out with real estate. And when you start keeping, title policies on blockchain and you implement smart contracts and all of these things, you're really streamlining that process. What does it cost? I mean, every time somebody refinances or does a loan, the title insurance and policies are ridiculous.
It's funny you're saying that. I'm actually getting a loan. I'm getting a construction loan on a piece of property that I bought 3 years ago. So I've owned the property. I haven't had a loan on it prior. I paid title insurance on it 3 years ago because I bought it from somebody I didn't know. Now, in order for the bank to get involved, I have to pay another $30,000 in title insurance to ensure that I am not screwing over here, right? So that I don't have something here that's unrecorded as the only owner and a few other things. But title insurance has a lot that is going to change in their world if this becomes something, because if I'm putting that on chain and I'm sending that out to the nodes and I'm sending it to Adam and Dre and everybody else, and they all know that I don't have a loan on it, nobody else has recorded an encumbrance on it or anything like that, then I have clean title.
Yes, and there's no need to continue to repay that price over and over and over again.
Which is all that the title company does. The title company says, well, we went down to the county and we checked on that, right? So now we've created the digital security. And the thing that does is it really works well in a transparent environment.
Right.
And, it's often funny to me when I see and hear who's saying that blockchain or cryptocurrency isn't viable. It's usually those that have the most to lose, right? It has the big banks. Right. Jamie Dimon loves to say how bad it is.
Sure, you take away the bank's ability to make money and provide loans, and you take away, it's really going to hit the title companies hard. I'm curious to see how that is going to happen, but you take away that title insurance money and some of these things that, people have made so much money on for so long, you're going to get some kickback. I mean, the banks don't want to lose their ability to provide loans.
No, and so now we've gone to the process where we've been able to, and this is the thing that I think is so great, right? Because if you take the environment that we live in right now, if you bought a house 3 years ago, you're sitting on a couple $100,000 in equity, but you have to go get another loan, you have to refinance, you have to repay those fees, you have to repay the title fees. Maybe you can get a HELOC. But then again, how do you do that? You still have title insurance involved. There's all these things. What's happening?
Origination fees and all these fees.
Exactly. Exactly. And I love my buddy Paul Anderson, right? Who's in lending space, and and he makes good money doing this. Well, tell me, Courtney, walk me through the process of, how I would be able to change that. What we see and what we're doing in the future here, where people are able to not necessarily involve the banks, go into the lending pool, get DeFi. What's happening with that, and how do you see that unfolding in the digital empire?
Well, I think everything is moving to digital loans. Like I said, the last 2 loans that I've done were it took me a day. There were no origination fees. I did a collateralized loan, and there's collateralized and uncollateralized. But we're actually, that brings me back to the whole real estate thing and where we have been headed on this real estate tokenization and how that is breaking out because, just like we were talking yesterday and the platform that you have been working on.
Let's be honest, it is a we thing.
It is. But I was invited into that space, and I'm pretty excited about it. But that's going to change the way people transact in real estate, and I think we should dig into that, because that is really what is going to change everything about real estate for everybody in this world, not just the United States, not just it's everywhere. And it's going to change the way it's transacted, the way it's stored, the way that it's funded.
Well, and Courtney, I know a lot of guys that do, they do fix and flips, or they do, they do wholesaling, and they're taking on the aspect of real estate, and they're doing something with it in a temporary fashion. They're going out for maybe a little bit higher interest loan. They're collateralizing it quickly to a low level. They're coming in, they're doing the improvements, they're putting it back on the market. And a lot of times they'll go to IRA people, or they'll go to a hard money lender. But really, the DeFi space is allowing that to happen, those transactions to become longer, where the wholesaler can actually buy it, refi it, or buy it, fix it, and hold it long term. And one of the things that happens is people get involved in the DeFi space. And since it's a pool, when I want to get out of the pool, I can leave. I have portions, I have processes that allow me to get in and out on the chain. And
Right.
that's always been the headache before, right? If we raise
Yeah.
money, we're going to raise money in a fund, we're going to raise $5 million, we're going to do this and go through that process where we do this. But now if Jimmy wants to get out, that doesn't really work very well, because we've got all these documents and we docu-sign them, and we've got them in a file cabinet over here.
And that's been the problem with real estate. I mean, real estate's one of the best vehicles to invest in, but it's very illiquid, and you are stuck in that investment from the time it's bought until the time it's sold. There's no way to move in and out of it, which is what is so beautiful about real estate tokenization and what we're working on and what we're moving into. So,
well, and that's true. And that's where we have taken our normal, what I do on a regular basis is I develop projects, I syndicate financing, and we do all of that with the SEC. We create a partnership that is, there's hundreds of shares, there's thousands of shares. And what we do is we are actually doing the whole same process, but we're creating a digital security that becomes much easier to navigate from the limited partner side, or I don't want to say the silent investor, but the passive investor. That was what I was trying to get to. For the passive investor to find something that he is actually able to take more control of that, because if he wants to, in the thought process of the house, we spent $300,000 on a house, we refied it, or sorry, we fixed it, we've got it rented now, and it's now worth $500,000. We've got this equity. Well, we can DeFi that equity, which is decentralized finance, and receive those funds back. But I can also, as an LP, as a limited partner in this digital security, can find financing, right? I can get DeFi on my token. So if I find another deal, let's say maybe it's a carbon scrubber that somebody's selling or something like that. Courtney, you might know somebody. But if we're doing that, then I can DeFi, get some financing on my security that I have in this office building over here. And I'm now able to go through that and put that into this other project. And so the reality is at the end of the day, it creates a liquidity in an asset that before wasn't necessarily liquid, not because the asset wasn't liquid, but because the paperwork and the headache and the syndicator, the general partner, the guy that's in charge, the gal that's in charge didn't want to go through all the headache to deal with this. But it now puts it in a different place where those tokens are exchangeable on different platforms and other things. So you really are putting it in a place where it puts a lot more choices and responsibility, not responsibility, but it puts more choices in the hands of the limited partners, right?
right. Well, and some of these, different, exchanges and things like that. I don't know if any of you are familiar with BlockFi, but they're even working on doing loans based off of your ownership in an apartment complex and based off the equity that you have built in. So those are things that are rolling out as well.
And this brings me to another point real quick, Courtney, because I know that up until a couple of days ago, I didn't always know the difference. But what's really the difference between a coin and a token?
coins are actual blockchains. So like Bitcoin is a coin, Ethereum is a coin. They have their own blockchain. Now, to be a token, that's going to be a project that's built on another, like there's a lot of projects that are built on Ethereum. Those projects are all tokens. Once they, like CRO for crypto.com, I'm a huge advocate of crypto.com. They're one of my favorite platforms. You know, they had their CRO, which is their native token for crypto.com. And it was initially built on Ethereum's network. So it was a token, but they've actually created their own blockchain now. So now it's actually a coin. So,
and Courtney, I think last count was over 14,000 different blockchains, which, so there's,
well, 14,000 different coin or tokens and coins. So there's a lot out there.
So when you're building a blockchain, you're going back to the same thing that Bitcoin is built on. You're using that same technology. So everybody's using that same technologies. They're just importing different flavors and features of what they want to do with that so that it becomes an NFT based tokenized thing for real estate. And so those are the kind of things that are happening there. So there's a ton of things that are going on there, and just the ability to diversify and utilize the unique investment opportunities that blockchain is providing. And guys, really take the time to reach out to people like Courtney or to Crypt Nation guys and really understand that blockchain and crypto are very different. And the utility that we're finding in blockchain on a very, very consistent basis is filling needs like this, where it's decentralized because we've kind of come to this place in our society where we don't really trust much of anything anymore, let alone banks and large businesses. And we're able to take that back to ourselves to keep this information going on inside so that we can now create our own little ecosystem, if you will, that's interested in, let's say, syndication, or let's say that we're dealing with apartments, or we're dealing with cars, or we're dealing with Van Goghs that we all want.
That's what's so beautiful about tokenizing these assets. And the great thing about it is you can tokenize any asset. It can be real estate, it can be oil and gas, it can be gold, it can be anything. It can be the carbon capture units that we're working on. I mean, you can go in and tokenize that asset, and essentially, like what we've been working on is creating that secondary market in a way for people to literally go in and trade in and out of different assets that they want. When you've got these tokens, it's almost like buying, poker chips in a casino. You go in and you put your money in and you're like, okay, I want to invest a little bit into this apartment complex. I'm going to invest a little bit into this oil and gas company over here. Okay, I'm done with the oil and gas. I'm going to move that money over to here. Maybe I'm going to leave half that money in oil and gas, and I'm going to put the other half into gold. I mean, or maybe there's a storage fund that you've come up with. So that's that liquidity that tokenizing these assets creates is what's amazing. And it allows you to move in and out of different assets as you see fit.
Well, and the other thing too, Courtney, that we've experienced in our marketplace here is we've found that there are a lot of people that would like to be able to raise more money or to be involved in something. They just don't know how, and then they don't know how to manage the data afterwards.
Right.
You keep talking about smart contracts, and we both know that smart contracts aren't really smart. You put all the information in them. They're just basically electronic triggers that say, hey, we're going to do A, B, and C, and we're going to do X, Y, and Z, and we're going to make sure that everybody does it right. And then there's tokens
kind of an if-then. It's like an if-then situation. Yeah. If this is met, then this happens.
Yep. And then the other thing that you're seeing is that you are also getting chain built like Avalanche that then has voting rights. And now you're combining that with a syndication where now you have an active partnership where we can go, hey, do we want to spend $10,000 to repaint the clubhouse? And everybody can vote. And then we can have a more of a democratized system where all of this is happening, and it's all happening in real time, and the votes are recorded, and it's all very, very transparent. And so when people go, I don't like that crypto thing, it's kind of shady. Maybe crypto in your experience is, but when you really break down the blockchain technology, it's not. It's simply using it as an effective tool to to execute on an idea, a concept, a set of documents, and keep everybody in the same place.
Now, and that's where we've really got to break down that kind of barrier of understanding. You know, people think, like I said, that blockchain is Bitcoin, and Bitcoin is, but when you're tokenizing something, you're not making it into Bitcoin. You're not creating this volatile, asset. You're, when you tokenize it, you're creating a token specific for that asset.
Right.
And you're just utilizing the technology.
And when you say that, we're creating a token. So we talked about we're building it on a different chain, and now we're creating this token. We've created a digital security, and we've created a ledger that's distributed that says everybody on this call, there's 58 people on this call. All 58 of you guys are on title in the latest real estate deal we did. And all 58 of you know how many shares each person has. And all 58 of us would know when Drake Campbell sold his, right? And
right.
Hey, why'd you sell? This is an appreciating market, buddy. I'm just picking on you, buddy. But we would really see all of that as being transparent, and it allows for that in and out process where maybe somebody wants to refinance some of their equity back out, be able to take that into another deal. And yes, Rick, you could sell to Sam Smith, but I think Sam will pay a little bit more. Hold on for a couple more weeks, right? But this is the thing that we're creating a marketplace that allows that to happen. And the token that we created is based on the asset that it is the underlying thing, which when you really look at it, I mean, the thing that is so popular about crypto right now is because it actually is doing something unlike the US dollar, which is just laying there and getting more printed of it, right? And there's more things that are happening
down quickly in flames.
Yeah. So, there's all of these things that we can see, but the reality is at the end of the day, we're all seeing that we have very, very good utility that's coming out of this, and the ability to diversify that utility. So that is where we can continue to grow, and we can continue to move. And that way we have the smart contracts that are in governance. We have the different utilities that are going underneath that. And so with that, before we get too far out, I want to thank you guys for coming, but I want to also open the floor up because we have had kind of a flood of questions here. We'll start with Carter. Carter asked, isn't fundraising for loans security sales? Well, fractionalized real estate is security sales. And yes, we do involve the SEC with our particular product. And it can be for accredited and non-accredited investors. There's different regulations there. There's a crowdfund CF, which allows for $5 million to be raised by non-accredited investors. There's a Reg A Plus that'll allow for $75 million to be raised to non-accredited investors. There's also a Reg A or a 506B and a 506C that deal with regulated or accredited and non-accredited. So there's a lot there that you need to be aware of. And we have more information on that. If you want to talk about that further, we'll be sending this out in an email and you guys can respond to that. Do you want to take Frank's question here or his comment here about his NFT?
I don't see it. Hold on.
Frank is saying, funny timing of this. He's building an NFT-based syndication of a storage facility. So it sounds like he's doing a Carnomaly for storage. So we can call it Stornomaly, right? You, me, and NFT is where we store our stuff. So that's awesome to see how that's coming together. Let's see. Then we had, how do you handle capital calls and distributions? You know what? That is the beautiful thing. I think that is one of the best things about the blockchain is if you're talking about distributions, and let's say that this was Carter again. Let's say that Carter, you sold half of your tokens in this particular process or in this particular project, and I go to distribute that. I put it in kind of like an old-fashioned Plinko machine, and the distributions follow the chain. And then they realize that, oh gosh, Carter sold half of his to Susan. So it sends those to Susan. So it really simplifies how you distribute your money, how you get your K1s and all that kind of stuff, and everything that happens there. It all comes down on chain, and it can be done that way. And so it really helps that happen. How you handle a capital call is actually in your documents that are locked inside your smart contract. So that really doesn't have anything to do with the blockchain as a function. But if you were using Avalanche as your chain that you built your product on, built your syndication on, you would be able to vote through that and be able to understand better how you guys were going to process that. So
is the conventional investor ready to deal with the digital asset component of tokenization? So that's a really good question. And ultimately, Shannon and I are working on a platform where, a syndicator will be able to come in and tokenize an asset and then bring the investors along. But then that platform opens up all of the other assets on the platform to those investors. So essentially, we're creating a marketplace where investors can move in and out of different assets. These syndicators can come in and help, they can tokenize their assets, creating a liquid asset for their people, and it opens up to funding from different sources as well. So it's really going to break down the barrier of entry for investors. It's going to help newer syndicators. One of the biggest problems newer syndicators have is, how are they going to raise money? How are they going to do this? So it's really going to kind of change the way real estate is transacted altogether. It's going to make it easier for new syndicators, people that have had assets along. I mean, you could even come in and tokenize an asset that you syndicated 2 years ago, get that going on the blockchain, tokenize it, and then people can trade in and out of that asset, and into different assets. And not only that, but you'll be able to go in and, because there's monthly kind of appraisals that are done, you'll see what kind of equity you have built up into that asset. So you can go in, you can withdraw that equity that you have built up into that asset, put it into a different asset, cash it out, go and spend it. You'll be able to borrow against it, and use that and put it into other things. So there's so many things you can do, and tokenizing just opens up an entire world that has really kind of not had any of those things available. So it's changing it all.
Well, and the other thing that it does, simply put, Joe, is it allows for, when you do a syndication currently, we send it out on DocuSign. Everybody does a DocuSign. I guess there's a copy of that somewhere in your email, and then we put it in a file cabinet drawer, and we wait 5-6 years down the road, and then the GP calls and he says, "Hey, by the way, we're getting ready to sell this," and then you go looking for your document that you can't find. The whole thing about the distributed ledger just allows everybody to see who's involved in the deal, or how many shares are sold out, what's going on. It really kind of puts it out there. So when we've had the conversations with investors about that, they really love the transparency of knowing that, hey, I'm not the only guy in this deal. I'm not the only person in this deal. And there are more people involved. And I can see when someone sells, I don't know who, it could be anonymous, but I can see what's going on in that, and I can be a part of that. So we are seeing that when people understand truly the difference between their conception of crypto and what blockchain technology really does and how it actually is beneficial to them, there's a lot of education that goes into that, but we're finding that even the average investor is really, really interested in that. So with blockchain, there would be no LPs in the syndication. No, actually, there would be ways to set up a lot of different ways, Thomas. Blockchain is just the vehicle that delivers it. It's like a bus. Whoever you want to put on the bus, however you want to assemble them, whatever seats you want to sit them in, there's just a smart contract that gets you from point A to point B. But you could actually have the ability to vote built into your ecosystem, built into your blockchain, built into your technology. So there's a lot there. So Mr. Campbell's talking about what's stopping somebody from hacking the blockchain. Well, that's the immutable process of it. If we had 58 records, which there's 58 people on this call, we had this distributed to 58 records, then that person would have to go back in, change all 58 records and all records beyond the initial purchase, and then change the whole thing. It's the concept behind it.
I don't know of any blockchain that's ever been hacked. There have been exchanges that have been hacked. There have been, people's personal accounts is generally what you see that's been hacked. I've never heard of an instance where blockchain has been hacked. In order for you to go in and hack Bitcoin, you would need to take over control of over 51% of all of the computers in the world that are on that system. So I think there's 11,000 computers that are verifying transactions. So you would need to take control of over 51% of them to hack that blockchain. And I'm not going to say that that's impossible, but I don't know how you would even begin to do something like that.
It's going to take a lot for sure. Then Amy asks, how many real estate assets have you tokenized? Amy, we are getting ready to do our first 3 this month. We are going to tokenize an office building. We're also tokenizing a ground up multifamily development. And we're also going to tokenize a Bitcoin mine. Courtney, tell us a little bit more about what we're doing with that Bitcoin mining operation that we're bringing on.
Well, we are launching our first Bitcoin mining fund. So, people that, may want to get involved in crypto, but maybe they don't want to buy Bitcoin or anything just yet. They'll be able to invest in the mining fund, which has amazing tax write-offs, tax benefits, and we'll be holding on to it, and then you'll get paid out in Bitcoin throughout the process. So it's exciting, and we're going to tokenize that, and I'm really excited about doing that as well.
So the great thing is that we're talking about real assets, and when you talk about Bitcoin, that is an asset because of its limited supply, because of its demand, because of what people are seeing with it. And that is, I mean, it's amazing what we're seeing with every single application that's coming out. But we're actually going to fund this through a basic syndication, limited partners, general partner. Courtney and I will be the general partners, and we're going to have more information coming out on that this next week, actually end of this week, really. Yeah. And we're going to be collecting that. We're going to have depreciation. It's going to function just like a real physical asset because we are buying computers. We are going into the mining business. And then our plan is to hold that, create the value there of mining all of those, and then at the end of that time period have actual Bitcoin to distribute. So it's going to be pretty cool. And when we send out this recording out to everybody, like I've had several people ask, are we going to be getting this as a recording? Yes, we are going to send it out to you guys. But then you'll be able to ping us back and say, hey, we want to be a part of the conversation that happens around the mining operation, so we can talk about that further. Tony, there's been several people that talk about the repossession portion of it. Let's just be clear. Blockchain technology is just a technology that distributes what you've already written in your legal documents. So your legal documents are in the smart contract. You're going to need an attorney to deal with this. You're going to have some user interface issues. You're going to have all those things that get sorted out. We offer those in our platform and marketplace that allow that to happen. But the reality is, at the end of the day, all of that gets put onto chain, so everybody has the same copy. And that says what would happen if you need to repossess or foreclose. So that's not really a blockchain issue. It's more of a how is your partner set up issue. Right.
Well, and I think what a lot of people don't realize is a lot of the same, processes that you go through to syndicate something or to invest, it's all going to be the same. It will just be stored in blockchain, and some of those processes will be streamlined and much easier and faster. Plus, it makes things liquid, but a lot of the processes and paperwork and things like that are still the same.
Right. So then we've got questions from Tony. What is the time frame when these changes actually start taking place in the market? We're already seeing that. There's already been houses tokenized in Mexico. Part of the Aspen, or part of the Four Seasons hotel in Aspen, Colorado was tokenized. We're getting ready to do 3, like I said, this year. We will be looking for, in reference to Caleb's conversation, we will be looking for new syndicators. But each syndication, each asset will have its own token. Mm-hmm. So there will not necessarily be token volatility. If your asset blows up on the platform, it will be your asset blowing up. It may not be great as far as the overall thought process, as far as what people think of the platform, but that will be part of the platform. It won't affect that. You've also asked if each LP will be given their own node. An LP can elect to be a node, but all of our tokenization is written on chain that is being, you can follow anywhere, and we can give you the keys to that once you are a part of that, so you can see where that's at more specifically. So gosh, guys, these are all a bunch of great questions. I hope we're getting to all of them. But man, there's just a bunch. We really appreciate you guys all coming out. This was very well attended. We want to thank you for that.
Right.
Sure. So,
there was an SEC and IRS question and everything that I'm seeing in here. So, you know, the SEC, like when you come in and do, say you're going to syndicate a 506B or 506C, those are regulated by the SEC. So everything that you'll be doing has those same regulations, whether you do a crowd fund or a Reg A Plus or whatever you do. And we've already got all of those things are in place.
And again, Courtney, you know, to go back to it, we are just simply taking your contracts, locking them into a smart contract and creating tokens that mint with that contract and all the other data in it so that everybody has the same immutable data, unchangeable data.
Right, right. So you'll still syndicate it just like you would regularly, but now we're issuing tokens where, say, in a year from now, somebody goes, okay, hey, I bought, you know, there's $1 million property. We issued 1,000 tokens at $1,000 a piece. Hey, I bought 10. So I've got $10,000 worth of tokens. And in a year from now, you're like, wow, my tokens are worth $5,000 each now. And I'm going to go ahead and sell 2 of them. Really, all of this platform is doing, you know, it's still, you're still syndicating, you're still doing everything the same. Just the way that everything is saved and stored is differently. And in tokenizing it, you're creating liquidity. So that's really, I mean, really, that's what's changing is we're making an illiquid asset liquid, and we're allowing people to trade in and out of it when they want to without having to be stuck in that asset for 5 years or 10 years or however long, or if they want to leave some money in that and get involved in something else, they have the ability to do that.
Correct. You know, Courtney, I just got a ping from somebody else too that said, hey, why don't we do a step 2? Why don't we come back to this, and we'll send out the invite to everybody. But what if we come back and we take these questions and we kind of put together a deeper dive into the actual process, bring the platform live and walk people through that so that they can see how that works.
I think that's great. Awesome. I think that's a great idea.
So thank you for that suggestion, guys. We are going to sign off now before my battery dies. It's also getting close to the top of the hour. We'll give you a chance to act like you weren't watching a video at work, but you know, we really appreciate you guys being on. Again, Courtney Moeller and Shannon Robnett with My Vertical Equity and how we're bringing liquidity to illiquid assets through the blockchain experience and through the DeFi as well. So guys, you're going to get a copy of this recording. We'll also send you all of the information to how to get to the next one, and we'll get that set up here yet this month before we get too far into the Christmas season. So guys, I want to thank you all for coming. And Courtney, I want to thank you so much for being a co-host with me here as we talk about this very exciting topic of blockchain.
It is. Thank you so much for having me.
Awesome. All right, guys, we'll talk to you soon. We'll keep you posted.